Hi, I'm Christy Moore.
And I'm Harley Dufek.
And today we're going to answer the question, how is the market really doing during the pandemic? So we get this question a lot.
Yes.
I mean, it's the number one question that people are asking right now.
Pretty much everybody's asking that.
Exactly. Because it's a real concern. I mean, we have been through market corrections before.
Right.
And this is based on today. You know, we're now almost in June, so things could change drastically. But as of right now, the market is pretty healthy from a supply and demand standpoint. So I want to go over some of the different markets that we work in. So we're licensed in DC, Maryland, and Virginia. And in Northern Virginia, sales are down year over year compared to last year, 14% for last month. So that sounds really bad, doesn't it? I mean, it sounds like, oh my God, that's a huge.
So you're
decline
saying this
in
same
sales.
month last year,
Right?
our sales volume was up 14.
Right. So a month, basically month after the pandemic started, that's the decline that we're looking at in sales. But we're also seeing a 25% decline in inventory. So real estate is all about
supply and demand.
Supply and demand. So if supply goes up, demand goes down, prices go down. If supply goes down, demand goes up, prices go up. So right now we've seen demand has gone down, but supply has gone down more than demand. So what we're seeing is that in Northern Virginia, the absorption rate right now is 1.25 months. So you're the expert on absorption rates. Why don't you explain what an absorption rate is?
Take a little commercial break for absorption rate, shall we? So absorption rate is what we call in the industry, a real estate industry, is supply and demand. So it's just a measure of a ratio of basically how fast are things flying off the shelf,
right,
given a certain geographic area and a price band approach in a certain amount of months. So most industry experts agree that 3 months is in an absorption rate is an equilibrium market, meaning it's not really a buyer's market, it's not really a seller's market, it's just an equilibrium market. So you get further down in the absorption rate, let's say you get down to only 2 weeks of inventory left. That would be a really hot market.
Right.
And according to the pricing guide, your house would statistically sell for 10% more than it's traditionally worth, right? And it works the flip side too. So if you have, say, 12 months of inventory, which would be an extreme amount of inventory, you could expect to receive maybe 10, maybe even 20% less just to move the property.
Which is what we saw happen when the market crashed in 2008, 2009. We actually saw inventory go up in 2007. So contracts started going down in 2006. Inventory started going up in 2007. Obviously, everything hit the fan, and we had 2 to 3 years of inventory on the market. Woo. That means we had 2 to 3 times on the market of what sold in the last year. So when we say there's only 1 month of inventory, that basically means that the same number of houses that are coming on the market is the same number of houses that are selling. So that's 1 month of inventory. If it was 3 months of inventory, that means there's 3 times as many properties on the market than what sells every month. So
it's basically trying to figure out how big that buyer pool is.
Right. And at 1.25 months of inventory, that's a very healthy seller's market.
Yeah, it's a big buyer pool. Basically, is the buyer pool this big or is it this big?
And also it depends on the price point. So over $1 million, you're looking at 3.66 months of inventory. So you're going a little bit into a stabilized market. It's not really a seller's market. And over $2.5 million, now you're jumping up to 18 months of inventory. So you're looking at a year and a half of inventory if you're over $2.5 million. So the higher priced properties are definitely seeing
less demand
and much greater inventory on the market. So it's really important to understand that. So that's Northern Virginia. So in DC, this is all of DC. We're not segmenting it by area. Obviously, if you have a house to sell, we would segment it out based on your specific neighborhood because it does change neighborhood to neighborhood. But in all of DC, we're seeing a 31% decline in sales. That's a huge drop. That's almost double or more than double what Northern Virginia is. And we only saw a 1.7% reduction in inventory. So much bigger reduction in sales and a much smaller reduction in inventory. So how that affects the numbers is that DC right now is at 2 months of inventory, and that is rising. So we are seeing DC supply is going up. Things are sitting on the market longer. And again, when you break it down by price point, over $1 million, you're at about 3 months of inventory. Over $2.5 million, you're at 10 months of inventory. So it's actually not as bad in the higher price points. But the market as a whole, we're definitely seeing a decline in demand, which makes sense because people don't want, I get calls all the time now that people are reevaluating where they want to live. They want to live somewhere with more privacy and away from people and move out of the city or move out of close quarters because of what's going on. They're reevaluating their lives and what they're looking for in their property. So that makes sense, I guess. Now, Montgomery County, Maryland, we've seen an 11.5% decline in sales, but we've seen a 38% decline in inventory.
Whoa.
It's a lot less inventory, almost half the amount of inventory that was on the market last year. So Montgomery County is actually performing about the same as Northern Virginia from the standpoint of inventory. So right now, Montgomery County is at 1.5 months of inventory. And again, in the higher price points, you're looking at about 3 months over $1 million up to $2.5 million, 16 months over $2.5 million. So again, higher price points over $2.5 million are definitely getting hit just from the standpoint of inventory. And we're going to probably see that change drastically over the next few months because, right now there's a lot of government assistance. People are in forbearance. People aren't putting their houses on the market because they're staying at home. So it should be interesting to see what happens over the next few months as we get into fall and, things start to dry up as far as the government is concerned. And, people might end up getting desperate and putting their house on the market and just selling it for whatever they can. But we're not really seeing that right now.
Yeah, we're not. In fact, what we're seeing is a lot more, I would say, serious activity. So all the listings that we have brought on this year in 2020,
for people that have to sell.
People that really have to sell. They do get multiple offers. They do get really high demand. We are getting very strong offers. However, the ratios are just a little bit off. I mean, meaning we would normally see 12 buyer showings per one offer. Now we're seeing less buyer showings, but still same offers. So
right, because people aren't looking at houses if they're not serious.
The tire kickers are not out.
No.
So
on both the buy and the sell side.
On both by the buy and the
sell.
sell.
If people need to move, they're out there. But if people don't have to do something, they're not doing anything. So
I'm not so alarmed by the volume being down because that sounds right. It's just but the actual transactions are happening. That's good. So.
Yeah. So I mean, if people want to sell or they need to sell this year, they should do it now.
Yeah.
Because we don't know when this is going to change. We have no idea.
Right.
I mean, anybody that says they know what's going to happen, they really don't listen to them.
Nobody knows that. Because
our crystal ball is broken. So we know that it will change. We just don't know exactly how. But we also know that in this area, in the Metro DC area, and specifically, there are a lot of people with a lot of equity. So they're not going to be as desperate as they were in 2008 and 2009, where they didn't have any equity to begin with, and then prices went down, their rates went up, they couldn't afford the house anymore, and it ruined the whole entire market. I mean, this is a health crisis. It's not a housing crisis, but we don't know how this is going to affect housing just yet because businesses haven't started to reopen. We haven't realized the full effect of we've never shut down the country like this before. So there's really no way of knowing exactly how it's going to affect things.
But we know it will change.
Yes. So if you're interested in knowing what's going on in your market, what your absorption rate is, and how you can sell your house, feel free to call, text, or email us.